Welcome back to episode 5 of Everything ETFs. I'm one of your hosts, Spencer Invest, and I'm going to pass it to our other host, Brad.
Hey, great weather today.
It's looking amazing out there. I'm jealous. I should be outside. I think it's raining here, though, so maybe not.
Yeah, plenty of golfers out on the course today.
Awesome, awesome. And we're doing something a little unique today. Let's see, how many do we even have? 8? We're going to go through 8 issuers and pick our top fund from each. It can be income, it can be growth. We're going to work our way through the list, and we'll kind of give a little breakdown on why we like these specific funds, why we're choosing them, and so on and so forth. If that sounds good to you, Brad, we can get rolling.
Let's get it on.
Let's get it on. Okay, we'll start with, let's do Kurv first. So let me share my screen. Kurv has a lot of options. I think people forget that they have their single stocks as well. But if you had to pick just one,
they just changed the single stocks the second week of January to match the style how they're running KGLD and KSLV. If I had to pick a single fund, that's tough. I'm just going to go with KGLD. I think everybody should have some type of sleeve, or however you want to call it, to gold, and they do just as good as anybody else.
Why would you choose gold over silver?
I think silver is more of an industrial play and will probably be part of a smaller sleeve than gold.
Yeah.
All right. So, I mean, that's at least how I'm doing it. I hold a bigger selection of gold than I do silver. But I'm going to just pick the gold fund because I think that's a long-term forever hold.
Yeah. I like that. These ones are hard for me because on one hand, I really like QQQI. My issue with selecting this one is there's so many other NASDAQ related funds. And although with QQQI, they're more selective on it, right? I think there's only 30 holdings, 30 to 50.
That's correct.
In QQQI.
Yeah, they only do the technology sector, which is it's kind of hurt them the last month and a half because there's been a rotation out of the technology side.
Yeah, that's why this is a hard one. But also, if we had more time, I would look at KYLD. You know, it's a weekly payer. It's a bit riskier. It's a bit more up my alley. But the performance with a lot of these, I mean, all 3 of the, I don't know what you'd even try and call them, KYLD, ULTY, and ULTI, have all had disastrous last couple of months. So that one's probably too risky for me. So what's hard for me with this is I have gold and silver in my growth portion of my portfolio. So I think I'm going to go with QQQI, even though I'm not going to be as diversified. I do think it's a really solid selection. And we've both had Howard on the channels for interviews. I really enjoy his description of breaking it down and their selection process. But you need tech to do well for this thing to do well, for sure.
Correct. Yeah.
Yeah. All right. Let's see. Let me plug these in. So here, I'll actually share. I wish it was easier to just bounce back and forth with what I'm sharing. Let's see. We're just going to share. Let's see this. So we have our selection here. We'll go all the way through our list. So your selection, you want KGLD, and I'm going to go with KQQQ. And there we go. There's the start. Now on to a very controversial group. Let's jump straight into YieldMax. And I mean, out of all of them, they have the most to choose from. It's crazy how many funds they have out now.
This is an easy one.
What are you going?
Oh, it's Soxy or Chippy. I believe because Soxy is only a 12% payer, and it's on SOX, SOXX, more or less. Right? Then I believe in semiconductors. And there's nobody else out there with a good income fund on there's other semiconductor funds, but there's no other income funds. So that's why I like Soxy.
Yeah. It's not a bad selection. I mean, both Chippy and Soxy have been doing super well. One thing and we've touched on this, I think outside of recording, I've seen a couple YouTubers talk about how Chippy is a no nav erosion ETF. And that always kind of blows my mind because nav erosion to me isn't just simply doesn't just mean the underlying has gone up. It's the way in which they're paying out and the rate in which they're paying out. Because I don't think it's fair to call, to be honest, maybe the target 12s, but 90% of these YieldMax ETFs are going to have nav erosion because it's the way YieldMax operates their funds, right? They're paying out the maximum amount of yield. So I struggle when
I'll go with
yeah.
anybody. Let's break down this nav erosion thing.
Yeah.
If there wasn't nav erosion, then SPY Eye's price would match SPY. It doesn't.
Mm-hmm.
The difference of it is how they're paying out and the percentage of target and the amount that they're getting capped.
Yep.
You know I'm a big Neos fan, right?
Yes.
So you sit back and go, even their funds are going to capture, approximately 80 to 90% of, SPY Eye's capturing 80.
Mm-hmm.
QQQI has been capturing closer to 90.
Mm-hmm.
But okay, what's that extra 10%? That extra 10% is nav erosion.
Mm-hmm.
Right? So even these great funds that are out there do have, nav erosion.
Mm-hmm.
Right? Or, but the bigger one is what do you consider to be nav erosion? And that's overpaying.
Yeah,
And I'm just going to
that's how I view it.
I'm just going to roll my eyes and say, we know that some of these funds have been overpaying.
Yep. Substantially overpaying. Like,
yes.
Yeah. But
Yes.
I struggle, and I understand YieldMax gets a lot of hate because some of their funds have just been terrible, right? But they do all kind of serve a specific purpose. They're not immune. You have to select the underlying. And I wonder what PYPY is doing because PayPal bombed on earnings. So I don't look at their single stock ones anymore. They're just not my cup of tea, I guess you'd say. But they do have some decent options.
Yeah, and if you look at Biggie's beating SPY on
which is
total
amazing.
returns, right? So you sit back and go, how much of a yield, how much of a yield is people trying to live off of?
Yeah.
Because if you're, this is just me and my little thought is, if you're trying to live on more than 8% in yield, then you need a reality check.
Yeah. Well, and that's what I think was a huge issue is people started to believe that if they put more money into MSTY when MSTR was going crazy, that they would be able to live off of to retire quicker. Yeah.
I did that video too. Right?
Yeah, we all did. I have, it's one of my most viewed videos of retire on Misty. How much do you have to invest to make this amount of money? And at the time it made sense. And since then, I get comments, they crack me up. This aged like milk as Misty has seen insane drops. Oh my goodness. Those ones always make me laugh.
I'm actually thinking about doing another retire on Misty video.
Yeah.
Because if you were paying attention, if you ran your own account like a brokerage account or a hedge fund, you would have shorted Misty and literally bought the inverse winter when it crossed the 200-day simple moving average. And if you would have gone back and looked at those dates and just rotated back and forth, you could have probably retired on Misty.
Yeah.
Right. The problem of it is people's psychology gets in the way and they won't short the stock that they like. And that's where the problem becomes. Yeah, you got to set up rules and become,
And stick to
you
them.
know,
Yeah.
and stick to them.
Yeah,
Trust
the
me.
rules don't do any good
Trust
if you
me.
don't follow 'em.
Trust me. I have the same issue personally, but if everybody's, if they watched my channel, I talked about the 200-day in the past. I even have a video based on the 200-day simple moving average.
Mhm.
And if you look at the two, you could have actually done very well. The problem that people get into is they only have a brokerage account and they don't want to pay the short-term, long-term capital
Long.
gains,
Yeah.
right? And I sit back and go, well, that's a problem. You should have an HSA, a Roth, a brokerage account,
Mhm.
and you should have your 401k if you're working.
Yeah.
You should have all 4 accounts. To
Mhm.
only have a brokerage account, you're guessing about your life.
Yep.
Personal opinion.
Indefinitely, yeah.
Yeah.
And I would man, for me, it's a hard selection. I'm curious. The Target 25 funds, they're still targeting too much, in my opinion. They should have knocked that down to 18.
I don't know. I think Nvidia can get 25.
I think NVIDIA can. I think Tesla would be extremely variable, and I think it's funny that they chose MSTR.
Well,
Um,
yeah. Hey, can I share my screen?
oh yeah, go for it.
I didn't even know how this works.
Just don't click the leave button. That's right next to the share button.
Okay, if I was going to do this, and I was going to look at this, and I broke this down
Holy
to,
smokes. Yeah, you did.
yeah. So I have almost everything there. So Nvidia is above all the simple moving averages,
Yeah.
and I'm good. Okay, we're good there. Tesla is below the 100-day moving average. Is that really what you want to be in? All right, and then you look at Microsoft is below the 200. Amazon is below the 200. If you're going to play like a hedge fund manager on single stocks, you really need to be looking at this.
Yeah.
Right. And, let's take it. Look at the NASDAQ. The NASDAQ
Mhm.
is below the 100, but the S&P 500 is above the 20.
Yeah.
The National's above the 20. Massive limited partnerships are above the 20. REITs are above the 20.
Yeah,
Right?
that's crazy.
And I shared this morning. Basic materials, the last 90 days is where all the gains have gone to basic
Mhm.
materials. All right. The
Interesting.
same thing with energy. Energy's up 17% in the last 90 days. In the last year, it's only been up 17.6.
Yeah.
But technology, the last 90 days is down 4%. And that's why they're below the 100-day.
Did you make this, Brad? Because this is really cool.
I did make this and I shared it with my community.
Yeah.
And you can do all this with AI.
Yeah.
Just to be fair and honest with everybody, is the simple moving averages is not a standard calculation.
Mhm.
All right. But I think I can go here. I can share the code. I just asked Gemini AI in think mode
Mhm.
how to bring in the RSI, and it wrote a script. Trust me, I'm not a coder. I have no clue.
Yeah,
Right?
this looks intense. I may have to try something like that and throw it into one of these because I think that'd be useful to look at, mostly for just my own portfolio, right? Buying and selling and seeing what's happening.
And it really comes back down to if you're following, SPY or following the cues, no matter how you're investing,
Mhm.
is maybe you want to take a little bit of money off the table when it crosses the 200-day. Maybe you
Mhm.
don't want to hold, KQQQ. Let's say you put $10,000 into it. Maybe you sell $2,000 of it. Reduce that holding by 20% when it crosses the 200. Because historically,
Mhm.
when it crosses the 200, and you can go in at this works about 75% of the time.
Mhm.
But historically, when it crosses the 200, it's going to continue to go down.
Yeah.
Right. So why hold it the whole entire way down?
Yeah.
Right. The comment is always, when do you know when to buy back in? Right. But you can come up with your own set of rules. Maybe,
Mhm.
hey, if it goes down 5%, I buy back a little bit. Maybe if it goes down 10%, I took $2,000 off the table.
Mhm.
I put 500 in at 5%. I put another 500 back in at 10%. Put another 500 back in at 15. Make up your own rules. Just don't follow it all the way to the ground. I think the analogy that I came up with the other day was buying some of these funds is kind of like buying a race car that has no brakes.
Yeah.
You can go really fast, but as soon as things go bad and turn
Mhm.
bad, there's no safety breakers.
At
You're
all.
capturing all the losses. And
Mhm.
that doesn't make, especially with especially with the technology of today.
Mhm.
Because that Google Sheet, I didn't know people know this. I can set that Google Sheet up to tell me when it crosses the 200 day, and I get
Mhm.
an email. It
That's
will
crazy.
literally email you. So it's almost like I don't have to watch it every single day, even though I'm a YouTuber and I do look at it every single day. Right. Uh, you sit back and you can get an email notification. Just set up the rules that, hey, maybe you don't want to ride everything down the whole way down.
Yeah.
Just, just throw it out for conversation.
Definitely.
I mean,
Definitely.
you got the app Robinhood.
Yeah.
And like I've said before, I used to have to call the breaker or call the broker
Call the
to
broker and oh,
do it, right? So
yeah.
I didn't have really an option of riding it all the way down. But
Yeah.
you don't have that. You don't have to do that today,
Mhm.
is what I'm saying.
Definitely. Definitely. So which would you take, Chippy or Soxy?
I'm gonna go with Soxy.
And I'm actually gonna do something interesting. I'm gonna go YMAG,
Oh, sure.
which again, I'm not the biggest, YieldMax fan. I used to be a bigger YieldMax fan, but YMAG has done consistently relatively well.
Yeah.
Um, in comparison
It-
to YMAX. I
eh,
mean, YMAX did super well for a long time when the market was super hot, and then every pullback, YMAX takes a beating. But also, I will say honorable mention. I think some of the YieldMax zero DTE funds are pretty solid. QDTY, RDTY, and SDTY
I'll
haven't
pass.
been terrible in comparison.
No, 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 no. You're right. They haven't been. I think that we know who the better player is on that game.
100%.
All
There are
right.
better zero DTE funds out there.
Just throw it out.
Just plain and simple. Yeah.
Yep.
Tap Alpha. They've got it.
Yeah.
I'm curious. I can't remember. I wonder if Roundhill versus YieldMax. I mean, the Roundhill ones have been around for so much longer.
Yes.
Um,
And they use a different strategy. I will give YieldMax that they are actively managing their calls after they write them, where
mhm.
Roundhill does not.
Yeah.
I will also say that YieldMax heartbeat traded their synthetics, where
Yeah.
Roundhill did not heartbeat trade the synthetics. And that's the reason why I just don't like Roundhill that much,
Mhm.
because they didn't heartbeat trade it and they should have heartbeat traded it.
Yeah. It's crazy. I mean, they're at almost 9 billion in AUM. It's wild to me that just QQQI is nearly outpacing the AUM of Roundhill by itself. That is
Yeah. Well,
nuts. That is
yeah.
absolutely crazy.
I think I pointed out somebody in my community here this week that Neos is a top 20 fund provider. Like
Yeah.
if you look at like Fidelity, Charles Schwab,
Vanguard.
BlackRock,
Yeah.
Vanguard, Neos falls in the top 20.
That's so impressive as an income only producing, ETF issuer. Wow.
That's right. And they're going to have more funds. I don't know what they're going to come out with. I know
Mhm.
I know what I want them to come out with, which
Yeah.
I'll be sharing my conversation with Troy here this week.
Yeah.
But yeah, and I bet it is on their table. They just haven't come to the table with it yet.
Yeah. Yeah, I'm curious. I'm always so curious. Like, I want to know. I know legally we can't know, but like,
That's right.
what are they thinking? What
It,
ideas do they have? What are they talking about behind closed doors? That
so,
what's being selected to be created, what's not being selected. I'm so curious.
and I think you just said something that was very. Somebody said something to me on X the other day of there's things that I'm not supposed to know.
Yeah,
So even if I do have an inkling of something, I can't. No, I can't share it.
yeah,
Right? I can't unless it's publicly known when a fund is going to come out. Right? The other day there was something on Vista Shares,
hmm,
and it was on their website. It's on their website. I can talk about it. It's
yeah,
publicly known.
exactly.
Right? You know, Neos came out with their boosted funds, and they posted it on X 3 days beforehand.
Hmm.
Well, it's publicly knowledge now.
We
I
can
can
talk
talk
about it.
about
Yeah.
it, right? But and as well as I'll just say, I talked to Neos the day that they posted on Twitter, and they still would not tell me
Yep.
when it was coming out, even though an hour later they posted on Twitter.
They posted that it was. Yeah. They
So
don't give you any
that's right.
extra info.
That's right. So there has been times that I kind of know what people, and there's all kinds of different rules. Like if it hasn't been filed for, they'll talk to me about it.
Hmm.
But if it's been filed for, like Neos will talk to me about it if it's been filed for, but they won't talk to me about it if it hasn't been filed for.
Exactly.
And
Yeah.
and Kurv will talk to me about it if they haven't filed for it, but won't talk to me about it once it's been filed. So it's
Yeah.
all, he doesn't back and go, I didn't know what the rules are. I just know that if they say, hey, this is confidential, then there is no way that I'm going to say anything to
That I'm
anybody.
talking about it.
Right?
That. Well, I'm curious on your pick with Roundhill. I know they're not your favorite. I didn't realize they have so many ETFs. I mean,
Go to chat. I am not going to pick one of their income
income.
funds.
Yeah.
And I just think that they could have done better. One, if they would have heartbeat traded, I think that that would have helped them.
Yeah.
Right. I just think they could have done better for the income funds.
Hmm.
But chat is very interesting, and it does a great
Yeah.
job.
Yeah. A lot of their options are. I mean, they have so many because I looked at Nerd for a while too, but it didn't do as well as I wanted it. And then, of course, they have their what? I don't know. I don't know what we can legally even say. Not legally. I don't know what we're allowed to say without monetization about this Mary Jane holding,
Yeah,
I guess you'd say.
we'll pass on that.
We'll pass on that for sake of, keeping
Yeah.
everything, I don't know, family friendly. But then, yeah, so they have their income. And oh man, I do think they have a couple underrated funds. I think Mag Y is super consistent, but for a long time it did underperform Y Mag, which YBTC is a weekly payer. YETH did super well. I think XPay is pretty solid. In fact, see, that's the hard thing. I would
So,
probably take
and I think
it.
XPay is the worst fund in the world.
You think so? But what about like SPYT that underperforms XPay?
I just think XPay is the worst fund in the world.
We really don't like it that much.
Now, and I think we talked about this beforehand, right? I ran SPY through the CAPM
Hmm.
through AI, and they said that I should expect a 12% on SPY, they're paying 20.
Yeah.
If they were paying 12 or 10, I think that'd be a great option for people. I
Yeah.
really do, right?
I can agree with that. I'm
I
curious,
think
Brad.
20% is just one of those, what were you thinking?
Well, why is it so high? Well, and I'm curious what you think. What is a realistic expectation of a percentage just based off options income? Because I wrote options for a little bit and it varies drastically. But like if we're expecting, so like XPay, if they're going to track the S&P 500 and like let's say across the board it trades the exact same price point as the S&P 500, which I know is not realistic. What like can we expect a 2% increase based off options premiums, 4%, 1%? What realistically can these companies create in regard to premium that would make these perform at, even 20% annually if the S&P is not keeping up at that pace?
2 to 4.
2 to 4.
2 to 4.
That's what I
It,
was thinking, but some of them they just boast so much more. I'm like, maybe there's hidden ways that they're doing it, but no, 2 to 4 seems more realistic.
yeah, and I think that's a realistic. Uh, I've had more than one person talk about this,
Yeah,
right? Two, 2 to 4 per year above the index, you're doing something.
yeah,
Anybody that thinks that you're going to do any more than that, you're joking yourself.
yeah. Another concept with Roundhill. I used to be a really big fan of the weekly pay series, right? They're a
Mm.
1.2x leveraged, but I've started to dig a little bit deeper and the performances I don't know. I might do a full video on it eventually, but the performances haven't been matching up and I'm not sure why.
Well, I think that you may or may not. So they rebalance that leverage weekly.
Yeah.
So weekly volatility plays in there.
Mhm.
There's also, they do it with swaps.
Yeah.
And I think those swap costs are a lot more than what people realize. And that swap cost is eating away into that leverage.
Well, and I'm curious, but then how is Tap Alpha doing their lift series without having? I mean, I guess maybe they will
Okay,
have.
that's a good comment. The lift series is on something like SPY and QQQ.
Mm,
They're not on Hui, right? Not
yeah,
on
single.
Robinhood with a
Yeah,
volatility of 50,
yeah,
right? Okay. If you were a bank and you had to gamble your employer's money, would you charge a higher interest rate on Hood or a lower interest rate on Hood compared to SPY?
higher.
Right? This puts, little common sense, and they're not, and they don't tell us what that's going to be, what that
Yeah.
swap cost is,
Yep.
right? The other one with the lift funds, they are reset daily,
Hmm.
where Roundhill is resetting weekly.
Yeah.
All right. So they're using total capital,
Hmm.
which, if you don't know, there's always been a relationship with Psy and Tuttle from the get-go.
Hmm.
Right. That's where I met Matt Tuttle, was with Psy at the bell ringing.
Yeah.
And there's always been that relationship. So Tuttle Capital actually helps run a lot of the 2x leverage funds
Hmm.
for RecShares.
Oh, interesting.
Yes. So they're like a sub advisor or whatever to RecShares on all their 2x leverage, I do believe.
Hmm.
So there's a relationship around here a lot. So I think with somebody like that running the swaps and the swap cost, right? That, and they're doing something like SPY, that swap cost will be a whole lot less. I mean, I just did an interview with Tortoise Capital, talking about their fund, TMLP.
Yeah.
And it's a newer fund on master limited partnerships, but they have like 80% of the fund is master limited partnerships and an ETF. And I called them out, said, okay, you're only allowed 25% without being a corporation. I said, you got to be using swaps. And he goes, we're using swaps. Yeah, reading the prospectus, they're paying 1.5% in a swap cost.
Wow. Yeah.
Right. Which is better than paying the 21% corporate tax.
Definitely. Yeah.
All right. So they'll do better than like AMLP because AMLP has to pay the 21% corporate tax, where you're only losing 1.5% with their fund. Again, no K1, it's a 1099.
Yeah.
You know, so hey, sorry about that. Let's talk about Roundhill. Who you picking?
One thing I will say, I think the weekly pay ETFs like AMDW has been doing super well because AMD's been doing well. Their gold miners ETF has been doing well. And I own 3 of these GOOW. So I don't want to pick just one of the weekly pays. I like MAGs as well as like a simple kind of beginner portfolio pick. I think MAGs is solid. You're holding the MAG 7. It's rebalanced. It's growth. But if I had to go income, I would definitely probably pick my favorite of the weekly pays, which would be AMDW, GOOW. But I think a safer pick, I don't know. I don't own XPay, or I own MAGs. I don't own XPay, but XPay I think is also really similar. It's another S&P fund, right? There are so many S&P and NASDAQ funds. So yeah, I'll go MAGs. I think MAGs,
yeah, I can see that.
I think MAGs has been solid. And I have it in my wife's portfolio. So I threw it in there because I was like, I don't want to rebalance and do all of this.
Well, and that gets into, I think all the 1.2, the weekly payers.
Yeah.
If you were following it and only held them when they're above the 100-day simple moving average,
Yeah,
I think I think you're doing well. I think if you would be willing to sell them when they cross the 100-day simple moving average, right? You know, there's no reason to ride out losing money.
Yeah, exactly. Holy smokes. I forgot Amplify has this many options.
They keep on growing.
My goodness. Oh, man. Yeah. There's so many options. I got to do more videos on their stuff. I mean, I haven't looked. I think I checked out Hack, their cybersecurity ETF. I looked at YYY, their CEF high income. What would you pick out of Amplify? I have one that I think I currently own.
Well, I own ETTY. I think it's a good fund. I think Biddy is an okay fund. I think they have a lot of good fun. I think these guys are the middle ground of some specialty options.
Yeah.
All right. So Biddy, Baggy, I've had that fund manager on the channel every now and then. The junior silver miners. And then their income fund on junior silver miners has been doing okay.
Yeah.
Right. So, you know, take your pick. I mean, they got all kinds across the board. But if I'm going to pick one, I'm going to probably pick the junior silver miners.
Very solid pick. Yeah, they've had a lot of these funds performing really well. I mean, right off the bat, I'm biased because I own Devo. Their enhanced dividend income ETF. It's been super solid.
Hey. Yeah, I own QDevo. So.
Yeah, I see. I love QDevo as well. Again, just another NASDAQ
same fund manager. Same fund manager. Covered calls on X is his handle.
Really?
Yep.
Interesting.
Yep.
One thing, I'm gonna do something a little unique with this one though. I'm gonna go with IDVO because
international fund. I get it.
It's been doing super well. And I just think that unfortunately the weakness that we're going to have with the US dollar, um, I mean, I saw this with ticker EFAS. It was an international fund that popped up when I was using Finviz to just search for different funds and whatnot. And it only yields 5 or 6%. IDVO, I think, is around that rate as well. But I mean, they're up like 60+% on the year because the international is just doing so well.
Yeah. And I think international this year, because that was on my spreadsheet, and it is definitely over that 26% on the BlackRock version, which is the
Yeah.
same. It's written on the same index, or follows the same index that Roundhill, that Neos is using.
Yeah.
Right. So that's the reason I picked it. But
Hmm.
yeah, I Devo, if you're going to hold multiple international funds,
Yeah.
right? I could see having iDevo matched up with some Neos funds, if
Hmm.
they're international, to try to get you that 8 to 10% that you're trying to live on.
Yeah. They've got a lot of options. Amplify is one to watch. Your ticker, it's SLJY, right?
Yes.
That's their silver miners. Oh man, on to our next. It's hard to go through these so quickly because some of them, there's so many funds that we don't talk about often that can do really well. So RecShares, I'm a fan of RecShares. I like their strategy. I like how they're doing the income and growth. And one thing I really like about them too is that they're choosing a different selection of underlying. Like a Walmart income fund is hilarious to me, but it works. I love Walmart as a stock long term. Um, but they also, I mean, they have a lot. They have their income. I wish they had a pay. They have their Osprey ETFs, their staking, which I haven't even looked too far into yet. But so many.
Okay. If I'm going to pick one, I want to pick NVII.
Yeah.
Easy enough.
NVII is hard to beat. Let me even pull it up. I don't love the optimization of their website. Here we go. Oh man, I can't stand the pop-ups. I don't know if you get this, Brad,
Yes.
but I get it all the time when I'm trying to film. I'm like, guys, stop with the
Oh,
pop-ups.
now that you mention it, I'm going to say something to Neos about that.
Neos
I
is
don't
just as
need to
bad.
know that QQQI
It
was an
won the
award.
award.
Got it. I
I'll
go to
be
your
like
website
in a
every
video.
day. I don't need the pop-up.
Yes, I'm recording and it's like boom. I'm like, oh my god. Like I'll just try and quickly X out of it, but oh my goodness.
Uh,
NVII, very solid selection. I'm gonna go similar. I'm gonna go with Tesla though. I'm gonna do TSII. They also have their FEPI, AIPI, CEPI, which some have been doing a lot better than others.
well, FEPI, I think I've read the other day, FEPI has been matching the S&P 500.
Yeah.
And I just shrugged my shoulders going, for what it is,
Mm-hmm.
they should be doing better than the S&P 500.
Yeah.
And that gets back into that, why are you trying to pay 24% when you could rate the calls farther out of the money and get more growth and pay me 12%? And
Yeah.
again, it comes back
Exactly.
to that psychology of, I think if you're trying to shoot for, I think 17 is on the top end
Yeah.
for some of this stuff, right? I mean, you're just trying to shoot too high.
Yeah. I can see that.
Yeah, I mean, there's some new funds coming out, and I hate to say it, there's some new funds coming out of stuff that I really want to get into. I'm just afraid that they're going to be shooting for too high of a distribution rate.
I know, and it's like, please don't just target an average rate that people don't have to worry about, and give the rest out in a growth format. I know it's not a blockbuster thing. You can't post, oh, we're yielding 20+%, blah blah blah. But people, I don't know. People want things differently than I do. I guess maybe those funds actually maybe they perform better if they can post that they have these super high. Look, here it is.
Gotta love them. Gotta love them. Come on, Troy, take that down. Or
Take that
it's
down.
actually Zach.
Oh, is it?
Yeah.
All right, Neos. Probably most popular, I would say, on my channel. I'm not sure. You think they're the most popular issuer for your channel as well?
Yeah, I cover their calls every month
Mhm.
on the I download them the last day of the month and the first day of the month, so
Yeah.
I can actually see how much money they actually made from the options trading.
Yeah.
That, literally Troy told me, if you're not downloading the last day and downloading the first day, there is no way to know what they're actually making on the options trades,
Yep.
right? And I do it because I'm curious. Now,
Mhm.
if you're going to hit me up on which fund is the best fund, I'm just
Yeah.
going to I'm going to shrug my shoulders and go, I will not hold TLTI.
Yeah, you probably have every other fund, don't you, at this point?
I don't have IWMI. We'll just go ahead and say
Really?
that. And I think I just looked at that the other day going, I should have IWMI because the Russell is going to do better during a downturn, or not during
Yeah,
a downturn, during
during
rate
lower
cuts,
interest. Yeah.
right? But I don't. But I do have I bought a little bit of the boosted funds. I did
Mhm.
not buy the Bitcoin boosted fund,
Yeah.
right? But I've been preaching about this all the whole entire time. I might rotate to the Bitcoin boosted fund when Bitcoin gets above the 200-day simple moving average.
Yeah.
But until until that happens, now I'll pass.
Yeah, this is a hard one. It really is. They have so many good options.
I think as a general rule for me, I'm going to just pick QQQI. I've always said it, and I always will. I think that
Mhm.
I think with the amount of premium they pay,
Mhm.
with the call writing that they do, I think that that captures a better percentage than their SPY-I fund of
Yeah.
the upside. And I'm just going to go, right back to what I've always said it, QQQI.
For me, I mean, I'm a little more aggressive than a lot of investors. I mean, right off the bat, the boosted funds stand out, and I'm kind of tied right now with XQQI and XBCI. Now, my problem is Bitcoin, like you said, it's slippery slope right now. No one knows
That's
what it's
right.
going to do. So the safer bet would be XQQI, but I also want to throw a wrench in. I don't own it, but I think MLPI is such a good idea. And I
I own
own a
it.
lot of the holdings currently, and I'm debating just I don't want to sell them, to be honest. I don't want to sell them because they're up really big in my portfolio. Like it's so hard to sell those that are up. I have Energy Transfer ET that's up 150 plus percent, not including the dividends. And then I have Enbridge ENB that's up 55%, including the dividends. And I'm
I
huge. You're getting some exposure, in my opinion, to AI as energy infrastructure. On top of that, you have the oil pipeline, you have cost of
mhm.
absolutely everything. So I'm kind of tied. I don't know between XQQI and MLPI. Those two are two that I'm really interested in for 2026 and well beyond.
Yeah, so I got an MLPI. I mean, I think that according to Brad, in my little world, is
Yeah.
you need 4 to 8% in master limited partnerships because it disconnected in
Hmm.
2022. So in
Yeah.
2022, the stock market went down, but your master limited partnerships went up.
Yeah.
So yeah, I'm gonna stick with my QQQI.
I'm gonna go with MLPI just so we're not both on the Nasdaq, but they're tied
Okay.
really in my head.
All right.
All right, on to the next. This one, I'm curious what you say, Brad. Granite shares.
Bar.
Bar. I should have guessed that. I should have guessed that. Bar is super solid. I mean, their leverage funds are really interesting. Their new auto callable funds. I did a video on these and there was like the zero views. I don't know if it's people are not interested in auto callables, but I'm curious. I don't understand the structure of them nearly enough to have an opinion yet, but I'm watching them. I think it'll be interesting to see how they do.
I had the gentleman on, I forget the name of the funds, to talk about auto callables, and he explained it well,
Yeah.
and I went, for what it is, that was too difficult of a explanation.
Yeah.
But
Was it
I
Calamos?
Calamos, yes. I
Yeah, because
actually had that
they
fund
have a
manager
couple of
on.
those. Yeah.
Yes. But what I found interesting was on SPY, they paid 14%, and on the Qs, they were paying 17%.
Huh. Yeah.
And I'm sitting there going, huh. So auto callables, they're paying 14 and 17. I get that same from Tap Alpha. I
Mhm.
get something similar from Neos. I don't want to say wake up everybody, but wake up everybody. You
Yeah.
can't get 25% out of SPY.
Yeah. Exactly. I think my pick with these series, I'm gonna go with PLTM. I own this one, the GraniteShares Platinum Trust.
Nice, nice. I looked at that the other day. All right. But I like Bart. And if you don't know, he ran GLD for like 10 years.
I didn't know that. Really?
Yeah. So that's like his background is in the gold world.
Yeah. See,
Right.
GraniteShares has all the pop-ups too. Every time you change the page, guys, we don't need the pop-ups. I don't.
Pop-ups.
I don't want. I have the emails already. Like, why are you asking me? One thing I didn't understand. I didn't know that GraniteShares was as large as it is, because some of their 2x long funds. I think it was the Nvidia fund. I want to pull it up. I mean, they were just massive. Where'd it
Yeah.
go? Yeah, their Nvidia 2x 4 billion in AUM almost.
It's a well traded fund.
Yeah.
And I think it's probably some of their 2X is probably some of the more traded funds that they have as day traders.
Yeah. It's impressive. But yeah, Tesla as well. Not as big, but only, 200 million. Nothing's gonna come close to Nvidia, I don't think. They had another one that was
No.
pretty large, but Nvidia. Yeah, it's crazy. I mean, you start thinking how much money they're making off of those expense ratios and whatnot. It'll
I
blow your
think that
freaking mind.
and I have said something to some of the fund managers about expense ratios,
Yeah.
right? That you can't fleece the retail investor forever.
Yeah. Definitely not. Let's see. Not MLPI. What did I say? PLTM. All right, we have our last ones. Fewer selections, but
TDAC.
not necessarily worse. TDAC right off the bat. Look at this. We got an email again, but all right. At least it's not a pop up. You're going
Yeah,
TDAC?
TDAC.
See, for me,
I got the lifted funds. I'll just say I got the lifted funds.
I do as
All
well.
right,
Yeah.
as a smaller percentage. All right, but I have the lifted funds, and I like TDAC because when I interviewed Cy, he said the basketball hoop was bigger on the
Mhm.
NASDAQ than it was on the SPY. Right. I think I shared that picture that I had where he
Yeah.
said that, and I did a little graphics on it. Right.
Yeah. It turned out great.
I, yeah, and that's the reason why I like TDAC better than T SPY
Hmm.
is because he's able to generate that revenue easier. So I think long term, it's going to be slightly better fun. But like I said,
Hmm.
I think that's one thing that we were talking about earlier today is I don't think enough people can have enough leverage in their world, especially the younger people. I'm not saying everybody should have leverage funds. Don't get
Hmm.
me wrong, but when the market's going up, and that's why I developed that sheet. When the market is going up, you should have a little leverage in your life to outside those gains. But when
Yeah.
the market, and if you're not going to follow, any rules like the 100-day or the 200-day or whatever rule you want to follow,
Mm-hmm.
right? Then you should just have the non-leveraged.
Mm-hmm.
But if you're going to make some rules and follow it and get in and out as things go up, right? In your Roth, because everybody
Mm-hmm.
should have a Roth, right? Then
100%.
I think you should have a little bit of leverage in your life.
Yeah, I like that. I like that a lot. I'm actually going to go with TSYX. One, to try to stray a little more away from just the Nasdaq again. But if I didn't choose TSYX, I would choose TDAX because I do like the leverage exposure. I think it was a phenomenal idea that they're doing these. I think the weekly dividends, weekly distributions is a really solid idea. Personally, this might be crazy, guys. I love weekly dividends, but I'm okay with monthly as long as the funds are consistent and solid. I don't have to have weekly dividends. When it comes to my personal investment strategy, I'm just reinvesting everything anyway. So I don't need it necessarily a week or, a couple weeks sooner. It's all going really into the same place, which is my cash position that then gets sent out to build different positions depending on what the market's doing and what those positions are doing. But I do like that it's a really solid, high yielding S&P fund, and T-SPY has been absolutely phenomenal. I think TSYX will do really well too.
Yeah, and I think that again, that fund has the strong possibility, no guarantees in life, to
Mm-hmm.
actually beat the underlying. But I think that people also have to realize it doesn't have any brakes or safety net. And
Yeah.
that's why you got to have brakes somehow, even if it's a parachute.
Yes. You got to have something.
Don't drive the race car with no brakes.
Yeah, definitely not. I will say, Brad, looking at our selections, I like all of these funds. I think it is a really solid list, and I'm trying to look at, I wouldn't necessarily build a portfolio just based off my picks here, but you probably could make a portfolio selecting one ETF from each issuer and have it be relatively well-rounded. Um, this was fun though. I really enjoyed this.
I think it was a good exercise.
Yeah. I'm curious. Oh, I don't know if people will comment this. If anyone in the comments, first of all, guys, don't forget to like the video and subscribe. We never say that. We should be saying that earlier on, but it is what it is. If you let us know what you guys think of our selections down in the comments. And if you want to create your own list, drop it in the comments and we'll actually check through those. Maybe we review them next episode. If enough people do them, we'll throw the comments up and go through and look at what you guys have selected. I think that'd be really, really
Sure.
fun to do.
So somebody pointed out in one of my videos a fund that was not on my radar,
Mm-hmm.
and it was a growth fund, and it was interesting. So yeah, if you guys have a different list of tickers, please list them down below. We'll take a look at them.
We also didn't cover every issuer, so maybe we'll do a part 2 and we can do Goldman and throw some of those bigger names in there, JP Morgan
Yeah,
and so on.
I just want to know JP Morgan. I just Jeppy and Jeff Kidd.
Valid.
I think that they were Revision 1 funds. I think there's better funds out there.
Yep. I don't disagree. Oh, Global X is another one that they have some that did super well and some that missed the mark a little bit. Some that missed the mark quite a bit.
I'm just going to go like this. I think that I think they need to switch up their strategy to what everybody else is starting to do in the world. All right, I think that
Yeah.
things are still evolving,
Mm-hmm.
and some of these guys are going to have to catch up.
100%. And the Global X has a lot of funds, like a lot
Yes,
of
they do.
funds. I didn't
Yes,
realize how many they have. There's a ton, but for another video. Any closing thoughts for the audience, Brad?
none. Just stay safe out there, and you do not have to ride it all the way down. That's all I can say.
I love that. And don't forget to check out Brad's channel and my channel. We'll link those down below if you guys are not familiar. And until next episode, we'll see you guys.